In the crypto world, Bitcoin has been stealing the limelight with its recent surge. After a lengthy 7-month consolidation period, Bitcoin shattered the $32,000 resistance level like it was nothing more than a flimsy curtain. The man behind these predictions, Charles Edwards, founder of Capriol Investments, doesn't foresee the upcoming monthly resistance posing as a significant challenge. Edwards is anticipating a swift continuation to the $43,000 range. Alternatively, we might see a short-term consolidation between $32,000 and $35,000 before the next upward leap. This sudden surge is certainly turning heads and setting tongues wagging in the crypto community. Bitcoin's performance is a riveting spectacle to behold, and it's making waves throughout the financial world. But as we marvel at this impressive rally, the question that has been on everyone's mind is, what's driving this surge? The factors contributing to Bitcoin's price action are varied and complex. One of the significant catalysts stirring up the crypto market is the anticipation of a Bitcoin exchange-traded fund, or ETF, approval. A Bitcoin ETF would make it easier for institutional investors to gain exposure to the cryptocurrency without the need to own it outright. This could potentially unlock a flood of new investment, driving the price higher. The possibility of an ETF approval has been a subject of speculation for some time, and the market seems to be pricing in a positive outcome. But that's not the only factor at play here. There are signs that Bitcoin is starting to decouple from equity markets, a development that is taking many investors by surprise. This decoupling suggests that Bitcoin is moving independently of traditional market trends, making it a potentially attractive diversification option for investors. This independence can also make Bitcoin more resilient to downturns in the stock market, which could be particularly appealing given the current economic uncertainty. Speaking of uncertainty, global events are also playing a part in Bitcoin's upward trend. Concerns related to international conflicts and rising macroeconomic uncertainty are causing investors to seek out safe haven assets. While Bitcoin's volatility might not make it a traditional safe haven, its potential for high returns is making it an increasingly attractive option for investors looking to hedge against uncertainty. In the midst of these factors, Bitcoin's price movement isn't just influenced by speculation or investor sentiment. It's also being driven by tangible shifts in the market landscape, such as increased institutional interest. This interest is evidenced by the growing Bitcoin open interest on the Chicago Mercantile Exchange, or CME. Another interesting development has been the increase in Bitcoin open interest on CME. This suggests that more institutional investors are taking positions in Bitcoin, which could be adding to the upward pressure on its price. The next part of our discussion will focus on this development, so stay tuned. A rising trend in Bitcoin open interest on CME indicates increasing institutional interest. But what does that mean, and why is it significant? Essentially, open interest represents the total number of outstanding derivative contracts, like futures and options, that are yet to be settled. In the context of Bitcoin, a rise in open interest on CME, a regulated futures exchange, suggests that more institutional investors are taking positions in Bitcoin futures. This is important for several reasons. The growth in institutional interest implies these investors are not just dipping their toes in the water, they're diving in head first. It's a clear sign that they see potential in Bitcoin and are willing to stake their claims. As these institutions take more positions, they also need to hedge their bets. This is where the surge in volumes and open interest on CME comes into play. The need for hedging involves buying and selling futures contracts, which in turn drives up open interest. This institutional interest is a key driver behind Bitcoin's current activity. To wrap up, Bitcoin is in an exciting phase. After breaking through the $32,000 resistance with a force akin to a hot knife through butter, it's battling to maintain its stand above the $34,000 mark. The surge is driven by several factors, including the anticipation of a Bitcoin ETF approval and a possible decoupling from equity markets. Moreover, the geopolitical climate and macroeconomic uncertainties have also stirred the pot, adding to the bullish trend. The icing on the cake is the growing institutional interest in Bitcoin, which is clearly reflected in the rising open interest on the Chicago Mercantile Exchange. This surge in open interest indicates that institutional investors are not just watching from the sidelines but actively participating, hedging their positions and contributing to the volume. Remember, the crypto market remains highly volatile. Research thoroughly before investing. Don't forget to like and subscribe for more updates. Stay tuned.